Hi guys, it's MJ Lax here. I'm recording this video as a lot of you are joining as new copiers and are asking a lot of questions. Some of them are similar. So I wanted to record a short video here and basically cover three things. Who am I and why I'm even talking to you. Number two, more importantly, my investment strategy. And number three, advice for new copiers. So number one, started trading when I was 16, made 158% in the first year, then traded for my teacher's money, my family money, big company money, and so on. Exited a lot during and before the crash for multiple reasons, but mainly because I knew that some of the richest people in the country where I lived exited as well, so I thought it's a good time, and also because I was focused on getting my education and developing in the career world where I went super quickly. So let's talk about that for a second. I spent 6 years with Thomson Reuters. So you may know Reuters is the biggest news agency in the world. And if you're a trader, you either have Reuters, used to be the case, always Reuters. It was to be a little bit of a monopoly. And then it became Reuters or Bloomberg, which I'm sure you know, and now it's Thomson Reuters. Actually Refinitiv at the moment. So I spent 6 years with them, became the youngest team leader at the age of 23. So that was a little bit of a record. And then I spent 6 years with them overall in their investment, asset and wealth management division. You can learn more about that on my website, which is mjtheconsultant.com. Then I was poached to become a global head of marketing of a technology firm, which actually gives me a little bit of an edge here because I've used my marketing knowledge here in valuations of the company. I will not give you give you away what I did, but it worked brilliantly with some of the things. So that was great. And then since then I've become independent. I mainly do CEO advisory. I scale companies. Very strategic mind, so I either lead CEOs in terms of how to grow the companies, build their teams, and do a little bit of marketing strategy and other things. So that's about me. Again, go to the mjconsultant.com to learn more. So it's just more touching on the trading. So I spent 16 years in finance now, and mainly on the buy side of financial services. So assets, investment, wealth management, a little bit of private equity and hedge funds as well. Now, in terms of my strategy here on eToro, so that's an important point. I do advertise it and kind of tell you about it quite a lot because I have a very firm goal. Normally your goal changes with the times, but my overall goal here now is to generate 50%, from March when I started, within 6 to 18 months, maybe 24, if we don't recover as quickly as I think we will. But so that's the goal. That's how things have been bought with that goal in mind, and that's how I took the position. So I think we're about 80% up now, so still 42% up to go. It doesn't mean I will stop trading then, but once the things I bought are at the level that I think they should be, then probably we'll take quite a bit of profit and think about what to do next, which I already have ideas. But the goal is really to get 50% within, let's say, 6 to 18 months, right? So if you're thinking of joining now, and whether it's too late, whether you missed the train and all that kind of things, I would say you haven't missed the train, because my research that I actually spent 4 months doing it, and if you will, I spent 16 years doing it. And actually Porsche that I bought at $29.99 in March, I wanted to buy it for the last 18 months at 55. So being able to buy it at $29.99 was pretty cool. So that's why I joined, and I have a very specific strategy related to that. So think of it, if you're joining now, you still go into the 42% growth strategy that I have, and it's likely going to be more, but I'm bullish enough to say it out loud. Because that's how the portfolio is built. In terms of the strategy overall, I cannot give you away everything for obvious reasons, but I do spend like 16 hours a day looking mainly at managing risk really at this stage, because my portfolio is more or less where I want it to be. I do take some profit. I close some stop losses, but my biggest positions are pretty stable. I will be trading around them, which means I will keep the position and take some profit, buy it at some lower, so that just kind of maximizes the return for us. But my strategy is really related to asymmetric approach to risk. I think I will have to do a 10-minute video at least about that. But let's just say when I feel that there is asymmetric approach to risk, so let's say a stock can go up 3 times and it can go down 20%, and that's a position I want to take. Or if I think the stock is 2 times overvalued, it can still grow, but I don't know exactly where, maybe 10-20%. That's a position I want to take. So I just find as many of those and obviously double down with the best metrics. But that's my approach. That makes me sleep well. And if I lose, I lose. But being asymmetric, and you will see that when I take the gains, like 72% on Aston Martin or 66% on Porsche, or these kind of things, they work in my favor quite well. So these are, I would say more value investing, but currently thanks to COVID and really believing in asymmetric approach to risk. And I think once we get this 50%, I'll be targeting about 15-20 on average. Again, it's never hitting. If you have 16 years experience, you know that it varies, but it's really a risk-adjusted return. I mean, eToro is actually doing an amazing job limiting popular investors to the risk they can take. So you will never see a 100% in a day, which I could do with leverage, and I've done in my life, and it's fun, it's great. But here we are to also protect your money. I don't want to have any drawdowns and big drawdowns. Actually, I have big drawdowns on my stats, but that's because I started buying during COVID. So even Porsche was down, and so this kind of max drawdowns that I have are quite high by a factor of 3 or something to what they really are, but it's fine. In the next 12 months they will go largely down and my risk will go down. So I spent, as I said, pretty much all the waking hours, my mind is wired that way, looking at positions, and I'm not afraid to change the strategy if not my overall strategy, but change some positions if the market shifts. I think the most ridiculous idea is to only hold equities long and call it investing or trading. I think it's just total madness. I think how can you be right if you just take one instrument and only go on long? So you miss all the other opportunities, shorting stocks, indices, you miss other asset classes. And so I think it's just a very kind of lazy approach to say, okay, I just know one instrument and I'm just gonna, buy Apple. And a lot of traders have 50% Apple, whatever, because they outbought Apple or Microsoft or Facebook. Fine, but I wonder what they're gonna do during times of crisis and stuff like this. So anyway, to sum up my market strategy here, the fund strategy, if you will, 50% within 6 to 18 months starting March 2020 with a risk-adjusted return. I do want to go to 5 and then maybe 4 on eToro, but 6 is an absolute max, so the value at risk is here protected. Now, in terms of new copiers, so a lot of questions here. So let me just say, I do strongly recommend open trades for the reasons I've mentioned before. It took me at least 4 months to take the positions I took. So, and the portfolio is just starting. So if you look at the financial stocks, which is a majority, I mean, not more than 50%, but it's the biggest sector that I'm exposed to at the moment. I believe they're hugely undervalued. So if you look at stocks like Lloyd's, Investec, now they grow 5% a day or so finally, but they still have a lot to grow. Lloyd's is around 30, it should be at 70. Investec is at 150, it should be at 450 and stuff like this. So still a lot of room to grow. So I would say don't hesitate. Copy with at least $600. Because I have a pretty decent amount of money, and if you copy below 600, you're probably not going to take the smaller trades that I do. So I would say 600 is minimum. Makes sense to do multiplication of those. So if you do 3,000 or 9,000 or 30,000, that's pretty good too. For those of you who are on kind of, small retail and want to invest, it's good. Don't hesitate to put 200 if that's all you've got. But I would say it probably makes sense for you to put 200 every month or so. That's, I've done wealth management most of my life. Probably the biggest result you get is either you invest now before the COVID effects are gone or so. But you also get really good results if you do it consistently, because then the price will average and it will really kind of go, whether it's going down or up, it will be somehow put in a mean, and therefore the average will allow you to go up. So I think that's the main questions. You can open it without open trades, but from what I see from my copiers, these people get worse results. So I would say copy open trades. I told you how much. Watch this video to answer any questions. Feel free to ask me as well. I do provide a lot of analysis. So if you have questions on Aston Martin, Investec, Porsche, Tesla, you will find a lot of analysis that I've done. So just go through my feed. And also please let me know what kind of topics you'd like me to cover. So this video format is pretty easy for me. I'm just saying I've been speaking for 11 minutes, so I'm going to wrap up now. I will speak about asymmetric approach to risk. I will hold a live session with you as well. I will be putting more money soon, so you may want to add some funds. And just tell me what you want me to cover, and I will make those videos more specific as well. So thanks very much. Thanks for your trust. It's an absolute pleasure to manage your money. And let's get 50% in the next 18 months. Thanks, MJ.